Many investors or people who desire to own properties in Kenya are finding it better option to partner through a real estate company. I agree, this partnership may become ugly and losses can be made in case the real estate companies decide to scam people. Well, we admit that 1 out of 10 companies may con people and hence tarnish the real estate industry. Hello and welcome to Kim Explains. I still believe that this is the most viable means to own a property in Kenya. But let me explain. What drives one to desire property is the desperation for financial freedom. It becomes one of the key dreams that people thirst to achieve. This therefore calls for the need to invest, and real estate is a gold mine. Before I go on, let me explain some few options available for one to own property. The easiest is inheritance, followed by pooling resources together where you build as a group. Rent to own, where you agree with the homeowner that after a certain period of time, you will buy that property. You can join a circle society, save or get loan to buy a property. You can buy a ready home by cash or build from scratch. You can also take a mortgage if you are a pensionable civil servant. Therefore, if you are not a civil servant or you don't work from a bank, you are disqualified. The most recent trend in real estate is an off-plan, a product that has made many people financially free. We shall discuss this in our next episode. So if you are not subscribed to this channel, please do so and ring that notification bell. Back to our discussion. Why is financing a real problem and the most difficult or expensive aspect in real estate? We shall use an example. It is an illustration which I believe will help you make informed decision when you will be acquiring property. Take an example. John, a 40 years old, earns a salary of 150,000. He's looking for financial freedom. We can define financial freedom as a situation where money can work for the lifestyle you are living, whether or not you go to work. We can assume that the total lifestyle cost for John is 150,000. So he needs to have an investment that will sustain this lifestyle. Real estate, for example rental, is believed to be one of the most productive investments. But in this episode, we shall unveil the truth. We know that rental profit is always 5%. Therefore, if you calculate, he needs an investment that will pay him 150,000 per month. That means a rental whose profit is 150 per month. So how much must he invest? If 5% of the total investment is 150,000, that means the investment he needs is 30 million. Remember, John is 40. Assume he wants to be financially free at the age of 60. Fast forward. By the time he gets to the age of 60, it's 20 years. 20 years from now, what will happen? John has an assumption that the property will have appreciated, but I have a different opinion. Inflation will have affected the value. Take an example. If the inflation rate per annum will be 10%, an online inflation calculator proves that 30 million will have the same purchasing power as 201 million 20 years from now. John will have the perception that the property has appreciated and that he has made a profit of 201 million minus 30 million. But the truth is, 20 years from now, 201 million will have the same purchasing power as today's 30 million. Let us rewind back to John's current position. We ask ourselves, does John have 30 million at hand? The most probable answer is no. So let us see the option he has, the option of a loan. He may opt for a loan of 30 million. If he takes a loan from Family Bank today at the rate of 13.5%, he will pay back 87 million if he decides to pay in 20 years. That one, he will pay monthly installments of 362,000. If he pays in 10 years, he will pay 54 million with a monthly installment of 456,000. So he cannot even afford this loan because he earns 150,000 per month. See, the interest of the loan is already double the principal. Therefore, for the investment to make sense of his desire to be financially free, If he's given the loan, he will have to charge almost 3 times the one he would charge for the rent, since the financing cost includes the loan interest. That is, a room he would charge 10,000 is now forced to charge 30,000. See, this investment is not worth it for John. And this is basically why the off plan is the most desired way for Kenyans. We shall discuss this in the coming video. Kindly subscribe and leave a comment. Let's meet in the next video.